In this video, we're going to talk about overtrading, some of the problems that it ends up causing, and how we can stop them. Hello everyone, my name is Michael Amat. I'm the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And so in this video and in this video series, I'm sharing with you my personal experiences of how I ended up becoming successful in the stock market as just some regular guy that has a passion for this stuff and still has a separate family, full-time job, household obligations, child, and is still somehow able to make this all work. And hopefully if you see all this and you see that I'm able to do it and there's nothing special about me, you realize that you could do it too. And so in this video, I want to talk to you about overtrading. Now this is a question that came up in our Chart Your Trade family Facebook group. I'll include a link to the group down in the description below. Check it out, sign up for it, it's free. And there's a lot of great people in that group. We all help each other and the group is constantly growing every single day. But the question that came up was from Anthony, and he asked about overtrading and how to overcome overtrading. And overtrading is something that used to plague me as well. And the way that overtrading used to plague me would be just like this. I would see a trade in a certain stock, and I researched this stock, and it was a high quality growth stock. I knew this. I read everything on the stock. I knew about the company. I knew about the earnings. I knew about the projections. Everything that you could need to know about a certain stock. I at least thought that I knew about this stock. And so I was very interested in it, wanted to buy it at the right time, at the right pivot, and then be able to hold it for infinity or however high this stock was going to go. I was going to be in for the long term and right up for the duration, and it would be, I would be able to make my millions and own an island somewhere. Has it happened? Hasn't happened yet. So what happened? Well, what typically happens? A stock breaks out and then it tends to fall back below the pivot. Most stocks that do break out of a regular classic pivot, they tend to pull back. I think it happens probably about half the time, probably a little bit more than half the time. One of the reasons why I prefer to use advanced pivots, but that's a whole separate series. But the stock breaks out, and then after the stock breaks out, what will typically happen is it pulls back in, and then you get this churn, right? Like it's trying to break out, doesn't break out, tries to, and then it just keeps on going. And so sometimes a stock will break out, even of an advanced pivot, it'll break out, and then it'll trigger your stop. And then it's like, well, okay, I did all this research. I want to get back in. When do I get back in? Do I get back in at that original spot that I bought it at? Or do I wait until some other time? And then if I wait until some other time, what happens if it goes off without me? Then what do I do? Well, I've had both of those situations happen to me, and I've had both of those situations happen to me many times, more than I care to remember, and it's happened to me over the past decade. What started to prevent that from happening to me again and again and again was after a stock breaks out, or if I see a pattern and the stock breaks out of that pattern and that pattern fails, then I'm not interested in that particular pattern anymore. I'm going to sit and wait for it to set up again. I'm going to keep that stock on a watch list. And just because a stock breaks out and it fails, that doesn't mean that it should be kicked off the watch list and you forget about it. And if a stock is on a watch list and it starts to break down, that doesn't mean that it should be kicked off a watch list either and forgotten forever. You should have a certain set of rules that will help keep stocks on watch lists, so that way they are still in your scope of vision So that way, when they do start to form patterns and break out and move, we're able to be there and to take advantage of those opportunities. So I would encourage you to keep watch lists for different types of things. Like you could have a universe watch list, which includes everything that you are interested in. And for that universe list, have a certain set of parameters that stocks need to make that list. So it could be that they pass your scans. It could be that you got them from a certain person that you respect and they mentioned it, so that's how it got onto the list. It could be from something that you read in the paper, or it could be just something that you happen to have a deep understanding of, and so that goes on to your watch list as well. Whatever it is, you need to outline the parameters for that list. Then you could go to that universe list and then on a regular basis, take a look at that list and see what's on it and ready to buy. And the way that I like to see what's ready to buy is by doing my technical analysis and seeing what's setting up in a pattern, and is the reward to risk something that I want to take action on. Do I think that I'm going to have at least a 3-to-1 reward to risk ratio on this particular trade? And then if it is, then I'll weigh all the ones that are ready against each other and then see, okay, how am I going to enter these, or which ones am I going to place orders on and then sit and wait for them to trigger? Because if you get many of them, we obviously can't play them all. And so that's how I have learned to deal with overtrading. I'm not just going to keep on like churning and burning like every single time. So like if a stock, let's say that original entry point was at $100 and this stock breaks out of 100, then it rolls over, falls down to $93. And so we're stopped out at 7%, let's say, right? Then it rallies and it crosses 100 again. What I used to do would be to enter right back in at 100 and even buy just a little bit more, because I think that that was something that Bill O'Neill said that he would do in his book, How to Make Money in Stocks. If that's the actual way that he traded, then fantastic for him. It was never something that I was able to personally make work for me. So what I would rather do is to have some other setup form before I go and test that again. So I wouldn't just buy it at 100 just because it broke above 100. I would need a fresher setup, something to get me back into that trade. And that's how I ended up stopping my overtrading. I hope this helped you. If you did, leave a comment down below. Let me know what you thought about this video. If you have any questions on anything at all, or if you want me to expand on any topics, leave that down in the comment section below and I will. If you like this video, click that thumbs up button. That always helps us out a lot. And make sure that you subscribe to the channel so that way you get every single update. Thanks again for watching, and I'll see you again in the next video. Take care and have a great day.